Did you know that 1 in 4 first-time homebuyers end up with a monthly payment they can't actually afford? And 32% discover major issues after closing? These aren't just statistics, they're real setbacks that can turn someone's dream home into a financial nightmare. I'm Vallario, and with 21 years in real estate and after helping over 1,000 first-time homebuyers through this process, I know where people slip up, and more importantly, how to help you avoid those costly mistakes. I recently heard about a buyer who discovered a $30,000 foundation issue just weeks after moving in. The heartbreaking part, it could have been avoided with the right guidance. If you're thinking about buying your first home, this video could literally save you tens of thousands of dollars. I'm going to walk you through the deadliest financial blind spots and mortgage mistakes that derail buyers every day and show you exactly how to protect yourself. But quick pause before we dive in. I just reached 1,000 subscribers, and it's all thanks to you. I'm now on a mission to hit 2,000. So if you're getting value from this, please hit that subscribe button. It helps me more than you know and keeps me motivated to keep these videos coming. Now let's dive in. Let us start with the financial side. Most first-time homebuyers focus so hard on saving for their down payment that they miss other major costs that can blow up their budget within months of just moving in. I see this happen all the time. Buyers fixated on just the mortgage without understanding the full financial picture of owning a home. Let me show you what this looks like in real numbers. You might feel confident with a budget of $1,850 for your monthly mortgage payment, but once you add in property taxes, homeowners insurance, mortgage insurance, and HOA fees, that number can easily jump by $750 or more. That's a 40% increase. Now imagine spending your weekends touring homes in price ranges you thought you could afford, only to realize later that the actual monthly payment pushes it way out of budget. It's frustrating, it's discouraging, and it happens all the time. It's like an iceberg. The mortgage payment is just the tip. A $300,000 home doesn't just cost principal and interest. Property taxes often run 1 to 2% of the home's value annually. Insurance, that's another $1,200 to $2,400 per year. And if you're putting less than 20% down, PMI can add $100 to $300 to your monthly payment. Then there's maintenance, the budget killer most people ignore. You'll want to set aside 1 to 3% of your home's value per year just for repairs. On a $300,000 home, that's $3,000 to $9,000 annually. I know people who have been hit with a $6,000 HVAC repair during a heat wave. No AC, no warning, and no extra funds set aside. An unexpected expense that completely threw off their finances. That's why lenders look at your PITI, principal, interest, taxes, and insurance. It gives a more accurate picture of the real monthly cost of owning a home. But when housing expenses eat up too much of your income, you end up house poor. And I've seen the ripple effect. Credit card debt, wiped out savings, skipped retirement contributions, even relationship stress. To avoid this, I recommend using the 28-36 rule. Your total housing expenses should stay under 28% of your gross monthly income, and your total debts under 36%. And when I say housing expenses, I mean everything. Mortgage, taxes, insurance, PMI, HOA dues, and maintenance. Also plan for utility bills, lawn care, security systems, moving costs, and those surprise little repairs that aren't so little when they all hit at once. Getting this right from the beginning isn't just about peace of mind. It directly affects your mortgage options too, because lenders are looking at your full financial picture when they determine how much you can borrow. And speaking of lenders, let's talk about some of the biggest mortgage mistakes that cost first-time buyers serious money. Now, what if I told you that skipping one simple step before house hunting could cost you your dream home or tens of thousands in interest? I've seen it happen too many times. Excited first-time buyers jumping straight into open houses without talking to a reputable lender first. Think of your pre-approval as your secured VIP ticket in a packed stadium of homebuyers. Without it, you're left outside, hoping for a chance to get in. Pre-qualification is merely a casual conversation with the lender about your finances with no verification. Pre-approval, on the other hand, involves the lender checking your credit, verifying income and assets, and providing a specific loan amount you're approved for. Sellers take pre-approved buyers seriously because they're proven financial contenders, and listing agents are far more likely to favor your offer when you're working with a reputable local lender. Why? Because local lenders are known for picking up the phone, closing on time, and actually getting the deal done. That gives the seller side peace of mind and your offer a real edge in a competitive situation. But beyond getting your offer accepted, choosing the right lender can literally save you thousands. Don't settle for the first recommendation. Shopping around for rates and fees can make a massive difference. Even a 0.5% rate change on a $300,000 loan could save you over $30,000 over the life of your mortgage. My advice, always compare at least 3 loan estimates, line by line. And don't underestimate your credit score either. It has a huge impact on your mortgage rate. Here's what that looks like in real numbers. And this is just an example. A 740 score might get you today a 7%, but you drop that to 680 and you're looking at 7.5%. And at 620, it jumps to 8.2% or more. That may not sound huge, but if on a $300,000 loan, the difference between 7% and 8.2% is $230 more per month. And that's over about $80,000 across the life of the loan. And here's something a lot of buyers miss entirely. Special loan programs designed just for first-time homebuyers. For example, FHA loans allow down payments as low as 3.5%. VA loans offer 0 down payment options for veterans, and USDA loans offer 100% financing in rural areas. And one of the most overlooked opportunities, first-time homebuyer assistance programs. These can include grants for down payments or help even with access to lower interest rates. But so many buyers don't realize they exist. Another common pitfall, opening new credit or making big purchases before closing. I've seen buyers finance furniture for their new home before the closing date, thinking it wouldn't matter because they were already fully approved, and it ended up costing them the house and triggering a dispute over their earnest money deposit. And sadly, the buyers genuinely didn't know, but that's not how the seller sees it. From their perspective, it looks like negligence, and that puts your earnest money deposit at serious risk. My advice, wait until the keys are in your hands, then go shopping. And when speaking with a lender, ask these questions. What's my total monthly payment, including taxes, insurance, PMI, and HOA if it's applicable? Can I see a complete loan estimate showing all fees and closing costs? Are you charging points to get me this rate? If so, how many and what does each point cost me? Do you offer rate locks? For how long, and is there a fee? And will you continue servicing my loan after closing, or will it be transferred? With your pre-approval in hand and the right questions answered, you'll be shopping with clarity and confidence, not guesswork or pressure. That's how smart buyers stay in control. A pre-approval doesn't just give you a number, it gives you confidence. But once you're out there looking at homes, emotions can take over. Even when the finances make sense, the wrong house can still break your heart and your bank account too. I've seen buyers fall in love with a home and then overlook all the serious red flags. They want it so badly that they skip inspections or ignore obvious issues, and then they get burned. Here's the reality. You have to look past the staging, the trendy furniture, and the fresh paint, because none of that matters if the home's core systems are failing. There are 5 critical systems every buyer needs to inspect before making an offer. The foundation, Cracks, sloping floors, or sticking doors can signal major structural issues. Then we have the roof. Replacing one can cost $10,000 to $20,000 depending on the size and materials. The HVAC is super important. This controls your comfort year-round, and repairs or replacements are very expensive. The electrical, old wiring or outdated panels are not just inconvenient, they're dangerous. And then we got plumbing. Water damage leaks often hide behind fresh paint and finished walls. I've seen a simple $300 sewer scope inspection save buyers from an $8,000 repair bill. And I've negotiated thousands in seller credits for our buyer clients, all because we didn't skip steps. But the house is only part of the equation. The surroundings play an equally decisive role. The neighborhood determines your quality of life and future resale value. Here's what I always recommend. Visit at different times of the day. A peaceful street at noon might be a parking nightmare at 6 p.m. Also, talk to your neighbors. They'll tell you things the listing never will. Check your local crime maps and school ratings on sites like greatschools.org. These can directly impact your resale value. Number 4, review city planning and zoning maps. That beautiful open field nearby, it might be a construction site next year. And 5, look at FEMA flood maps if the property's in a low-lying area, because flood insurance can add thousands of dollars to your yearly costs. Also, if the home uses a well or septic system, get a specialized inspection. These aren't optional, guys. They're non-negotiable if you want to avoid massive repair costs down the road. The point is, when you find issues, you don't have to walk away, but you do need to use them to your advantage. I've helped buyers negotiate thousands in repairs, credits, or price reductions simply by knowing what to look for and asking the right questions. Don't let emotions blind you. Be thorough, be smart, and surround yourself with professionals who will protect your best interests, not just try to make a sale to cash their commission check as quickly as possible. This checklist has saved my clients from countless regrets. Look, buying your first home doesn't have to be a financial trap. The horror stories happen when people skip steps, ignore red flags, or rush through the process without really understanding what they're getting into. To avoid these pitfalls, get your finances in order, understand total costs, including the hidden ones, and secure a pre-approval before house hunting, and thoroughly inspect the property and neighborhood. This is how you buy with confidence, and this is how you build equity, not regret. So let me ask you, which of these mistakes surprised you the most? Or if you were already a homeowner, what do you wish someone else would have told you before you bought your first place? Drop it in the comments below. Your story could help someone else avoid a costly mistake. And if you found this video helpful, don't forget to like, subscribe, and hit that bell. I post weekly videos to help buyers and sellers navigate this market with clarity and confidence. Thanks for sticking around until the end. I'm Vallario, an award-winning real estate agent here in Maryland. If you're thinking about buying, selling, investing, or relocating to Maryland, I'd love to help. My contact information is in the description box below. And if you're not in Maryland, no worries. I can personally connect you with a top agent I trust in your area. Just fill out the quick form below and we'll take it from there. Thanks again for watching, guys. See you in the next one. Bye.